It's loaded. Yep. So welcome everyone to our weekly live session as usual. The first live session of the new year. So very exciting. 2022 is here. The date is Sunday, January 2nd, 2022. And we just came off a great month, great week, and going into the end of the year, we had quite a bit of rally, a little bit of a pullback. The end of the year, but nothing too significant. More so, less of a pullback, but more of a sort of flat consolidation action throughout the final week of the year. We did get that sort of Santa rally, the mid to latter half of Christmas week, and the earlier earlier half of the week to follow, which was great. As I mentioned, more of a focus on large caps, more of a focus on just indices as a whole, the kind of base plays. As I mentioned, going into the end of the year, I think we'd see a little bit of volatility, especially being that the 31st as well is coincidentally the Friday. So we're really ending the week off at the very end of the year, the peak point. So as mentioned, lower volume. We did see QQQ sell off a lot more, whereas SPY, based on the technicals, it looked like it was holding up a lot better. As I mentioned, looks like we're in a new level on SPY. QQQ is looking like we could, it's kind of at a pivot point, so we could sort of pull back or continue higher to a next leg up. But as a result, I took a little bit risk off and mentioned that I was taking profits on QQQ. Subsequently added back a few days later, much cheaper on the leaps and going forward. So that was good. Going into the first week, we do have some Fed members speaking, so I'll post that schedule in the chat. We do have some economic data coming out for the week, so I'll post that as well. Other than that, not too much going on this week. We do have a few earnings, nothing too significant. I did post the earnings calendar in the chat, so you can check that out. The only one I'll be sort of watching, keeping an eye on, is Bed Bath & Beyond, which is reporting Thursday pre-market. So we'll be watching that. Usually I keep an eye on some of those retail names. So Bed Bath & Beyond being one of them. So that's a good one there. I'll be keeping an eye on. But other than that, we'll expand later on in the live session. One notable thing this week is, as I mentioned, delivery numbers for Tesla came out this morning and well exceeded Wall Street expectations of 266,000 approximately, I believe. They posted deliveries of, I believe, if I remember the number correctly, about 308,400. So a big beat, well exceeding Wall Street estimates, as I expected and mentioned last week. So I think we can see some quite the bullish movement on Tesla in the beginning of the week, this week, starting tomorrow, Monday. And then subsequently to follow, I think we'll see quite a few analyst upgrades based on these very strong numbers out from Tesla, especially coupled with their China numbers as well, which were really good. We did get some volatility last week as a result of negative news coming out based on a few minor recalls, but as I mentioned, it looked like smokescreen, and it's a good opportunity. So holding those weeklies, holding the leaps as well, I think both should perform well this week. And I'll expand on that later on in the live session. But for now, I'll just pass it on to DJ, who will go over his usual SPY analysis and discuss his thoughts.
Yeah, so pretty strong way to end off the year for 2021. Since there was no live session the previous week, did miss this coverage on a rally, but pretty much SPY found a higher low 451 compared to 449, and from there we had that 5-day Santa rally to pretty much push to all-time highs in the span of 5 days. I think similar things are going to happen in Q1 for 2022. Overall, I am pretty bullish for Q1. I think we can rally up until relatively mid to late February, if not early March. But past Q1 is quite iffy, and I think past Q1 is quite dangerous, especially if we do get the melt-up rally during Q1. I think past Q1, the timeline on the rate hikes and everything, it's not going to look too good. I think latter half of 2022 is quite shaky. So I think the first quarter for 2022 is most likely going to be the quarter for the melt up, and if that's the case, then definitely the quarter to be booking profits and going majority cash from that standpoint. There's a possibility that it might get extended a little bit longer if, say, we pull back in January and then start the rally in Feb, then this possibility could last up to March or April. But I think in general that the timeline is roughly Q1 for the melt up, at least technical speaking, and just kind of the setup on the indices and the names in general. Not much to cover except just the major strong rally. Last week we saw some minor profit taking consolidation. We are quite overextended from this recent move, but not really overbought on the RSIs or anything. So support is pretty much daily EMA 473 and 468 on the Bollinger Band. There's a gap right here at 468, so I wouldn't be surprised if we saw the first day or two of the new year kind of pull back a little bit to test the gap. We may or may not fill this gap, but I would think that any dips early into the year should be bought. It should continue quite a strong rally, as we'll see later on the weekly and monthly charts. Pretty much everything is shaped up to continue the melt up quite nicely. So just kind of get into the SPY weekly chart. Right, we had quite a bit of this consolidation zone where we shot from like 470s down to 450s back and forth for about 5 weeks, but convincingly rallied to the end of the year. We broke all of that resistance, and we did reject off the weekly upper Bollinger Band, but you know the weekly chart is uptrending very nicely. Got higher lows in. It's a fresh all-time high the week before, so there's really no weakness here, and consolidation zone has kind of taken place already. I know that David Hunter thinks that there will be another pullback before we continue the rally. I believe his targets are 450 or 440 SPY. He's using SPX, but essentially it's a pullback to 450 or 440 on SPY, and I don't really think that's going to happen because we've been putting higher lows here for the most part on SPY. 450 should hold. If we break 450, that would be quite a bearish change in the weekly chart, so I'm not really expecting that to occur. And also SPY monthly chart. As you've seen, we've held this monthly EMA ever since the initial dump and rally off COVID. We haven't dropped this monthly EMA. This is currently sitting right at pretty much 440 on the dot. Next month, I believe, will be up to 445. We usually see some sort of a back test on it, and once we back test and hold the monthly EMA and we rally up, we don't really see a back test for a few months later. The fact that we had one just a couple months ago and we rallied significantly off it, and we created a higher low wick here around 449 and closed well above. I don't think we will be flushing this support to test 440. So if anything, I think maybe a pullback to the 460 something levels on SPY before further continuation. It really does look like it's heading to well above 500 in the next month or two, as long as things kind of continue course. And it's probably the strongest indice. I think it's been outperforming QQQ tech for sure, because of a lot of the weakness on the growth names because of the additional rate hike that got introduced. And I think the timeline accelerated a bit in terms of safer um, safer play and where to kind of park money if you're more conservative. I would choose SPY. I think SPY leaps um, should do fairly well into the first quarter of 2022, and it's definitely a safer bet compared to QQQ and some of the other tech names. QQQ, similar thing to SPY, didn't break all-time highs because it was previously already weaker, and the pullback was a little bit stronger as we've already pulled back to the daily MA. So QQQ looks like it could pull back to the 390 range on a daily, but it's still well in an uptrend. And just for the first about 30 to 50 days, month and a half ish of Q1, I think there's a possibility that we could see QQQ pull off a extreme rally to the upside because of the fact that it's pretty much solely held up by the large tech names during the last couple of weeks, whereas a lot of the small caps, medium caps have been continued to be sold off for year-end rebalancing and tax loss purposes. So I could see a possibility where um, if we do get a kind of a squeeze and a rally on the small to medium caps and a further continuation on the large caps, we could see very well a massive move on QQQ in the next month to two on that bounce. That's how I'm currently positioned mostly in my portfolio on a lot of these Thai sauce loser names. The bottoms technically, which I'll cover later on, doesn't seem to be in for most names, though some names the bottom seems to be in. And it really does need volume as well as kind of continuation to the upside, because most of those names have been seeing strong 1 day bounces, but and then just continuing to kind of sell off after the 1 day bounce, so it's not continuing the trend change. If we do get a multiple day bounce, that should lead to a couple weeks on the uptrend in which it would gradually push up all names. Gonna move on to PayPal, one of my holdings. PayPal, unexpectedly on Thursday, I thought it was going to break out once it was pretty much putting in higher lows and lower highs for the most part, but with the daily EMA starting to flatten out, and it looked positioned for a rally, and the move on Thursday had quite a high volume move, so I added a position expecting it to kind of break out from there, and we would see 200 plus in the short term. Friday, it looks like, along with the rest of the market, it also pulled back quite a bit, but overall, this is this flattening, tightening range. A breakout on PayPal would be around 195, I think. A break above 195 would send this to about 205 to 210 levels very quickly within the week. It is holding support at higher lows. It would be quite bearish to see a drop below 180 again. So I'm not actually expecting it to drop below 180. That would kind of re-break the trend bearish on a daily, and it would take some time to recover after that. Weekly chart on PayPal, we can see it's still fairly oversold here, although it did bounce a little bit. Just the fact that the weekly EMA is continuing to move down, but price action has basically stabilized in the last 5-6 weeks. That's a bullish sign in general, because it means that soon we will intersect the weekly EMA and likely trend up as long as we don't break lower lows, which is why it's very important that we're able to hold like this 181, 180 level, because if these levels hold and we start to trend up, it's very likely in the next 2 to 3 weeks we will trend up and at least test this 210 level, in my opinion, if not continuation higher. It really depends on strength of the market and the stock itself. But PayPal is shaping up to be pretty good as long as it holds support levels. I think we'll get a test above 210 very soon. UPST, one of the stronger tax loss names, in my opinion. Seeing a little bit more continuation than other names and pulling back a little bit less. Overall, still in a daily downtrend where it's lower highs and lower lows, but it does look like it is more likely to reverse than not. And with the weekly EMA coming rapidly down, I do think that we will still see at least the 180 levels, but we may pull back to the 140s. But I don't think it will drop below this recent low of 128. In fact, I don't think we'll really drop below 135. So I'll be adding any pullback in the 140 levels, the expectation that we'll reverse back to the 160, 180, or even possibly 200 levels, depending on the magnitude of the move. Not too much to cover. It really depends how early the funds and institutions and also retail decide to re-add from the tax loss. If they re-add, it's 30 days after the original sale that they can buy back the stocks and not get penalized for claiming the tax. So generally, I think the majority of the tax loss selling, the deep selling usually happens in December. I would say around the first to third week of December. So midpoint of that is around mid December, which translates to around mid to late January is usually when a lot of the hard sold off stocks would get a pretty decent relief rally. This year has been a little bit different, so I'm not going super big or all in by any means, just because the indices have just been all-time highs and so strong. And even though these names have been sold off super hard, you could argue that a lot of them are still quite overvalued in terms of fundamentals. So it's a little bit of a different story, but I do think the likelihood still stands. I'd give it, 8 out of 10 times that it would still rally in the next 2 to 3 weeks. So I am positioned for most of that rally in PayPal, March calls. Took a little bit of small position January calls. I may add to both, especially if we reverse. UPST still just in shares, doing quite well in this position. I'll look to add and kind of just swing that as well. The wheat stock sector definitely has not found a bottom. Very weak compared to the rest of the tax loss losers, especially. It's quite clear here. It's just absolutely kind of held down by the algos. It's kind of, you just take a look at this kind of blue line on the daily, and it's pretty much just consistently been rejecting every single daily EMA attempt. And from there, we've slid pretty much 50% in the span of a month. There is no bottom here yet, but when the bottom comes, I'm expecting a very strong rally to the upside regardless. But right now, I won't be adding any large positions to it as I don't really know how low this will go and the amount of time it will take. But generally, Tilray, as long the rest of the weed sector usually make a massive rally between January to Feb. If you want, you could add some positions to it. I would classify this as a quite a high risk kind of lotto type play where there is no 8 out of 10 probability of a bounce. I'd put it like put it 50-50 maybe on the bounce, but if it does rally, it could rally quite significantly and produce 5 to 10x from current levels, I think, if not higher. Really depends on the move. Last year, it had a monster rally. This was around the same time as GameStop's rally, and it's pretty much sparked all heavily shorted quote unquote meme stocks. So if we do see GameStop or AMC make a early move into into this year, then there's a possibility that these stocks will catch fire as well. This is kind of one of those charts where it can kind of go down for literally like a month, 2 months, but in a span of kind of days or a week, it could reverse the entirety of that. That's pretty much what wheat stocks is like 95% of the year is red, but the 5% is green. It will just kind of rally like 400% during it. So it's really hard to kind of really position too big into it or expect too much of a play. It's pretty much just a higher risk kind of a bit less than a lotto type play because typically it does squeeze, but um, we'll see what kind of happens here. I would be adding closer strikes though, something like March $7 calls, March $8 calls, because it's pretty much you're getting you're reducing the strikes by about $1 or two, but you're only paying an extra 10-20 cents on the premium. So on the assumption that we rally back, I think we could see levels. I would say anywhere between 50 to 150% from the bottom. So say $7 with the bottom, you could see a move to around 10.50 or as high as 13, which might sound crazy, but really just a month ago it was already at $14. So it's not really anything too too outrageous actually. Lemonade, I'm positioned relatively big on this actually. It is heavily shorted. I think 1/3 of the float is shorted, so it is a bit tricky if it will actually kind of rally. But it has the setup that uh, if it rallies and squeezes bullish, it has a setup to basically like pop off like 30-40% in the span of a week or so, in my opinion. It's been continuously downtrending pretty much, since the last 2 months, and you could argue, aside from this 5-day rally in November, you could argue it's been downtrending ever since July of earlier this year when it was over the 110 levels. You could argue it's been a downtrend ever since. We haven't seen a reversal. We also haven't seen a move above the daily Bollinger Band since early November, where we had this quick, pretty much 30% plus rally in the span of 3 days. This rally here is basically what I'm hoping and expecting to see with some decent probability. Once we find a bottom, which is not fully in, I would say, even though it looked like it would be in once we rallied this 15% move the previous week, we did end up making new lows to 39. Keep in mind, this is also kind of a quote unquote newer IPO stock because it's only been out for about a year and a few months. So if it does find the all-time low for this and we start to reverse the trend, step one, we'd have to break 45, and then 47 is quite important because it has pretty much like a triple top at 47. I think if we break 45 and 47, by then it will go above the daily upper Bollinger Band, and I could see it move up to the 55, 60 levels. What we really do need to do is to hold the all-time low of support. So any support higher than that, higher the better. So we don't want to retest 39 and possibly break lower. That would kind of not only kind of prolong the bear trend, but also kind of eat away at the premiums on those calls. Weekly chart, just been kind of flattening, downtrending. Weekly EMA is around 50. So pretty important next few weeks on Lemonade, in my opinion. I think if we hold the $40 level and start to trend up, and we see money flow back to the tax loss losers, and I think very quickly in a span of 2 to 3 weeks, we could be up to the $50, $60 level, which calls would print very hard. But if we continue flat and drift lower, then premiums will kind of continue to fall, and it pretty much becomes an extremely high risk play. Currently, just looking at it, like we can kind of see just it pretty much rallied, I think, 13% in one single day on Thursday. So you can kind of see the potential of what it could do as long as it changes the daily trend. So just looking out for key levels of 45, 47. I will be adding a little bit more on the pullback if we get to 40 next week on the assumption that we would hold the all-time lows and trend up from there. But that had to do dependent on the overall market. I do think the majority of these tax loss loser stocks should bounce. Not all of them, but I think most of them will bounce. And I think some of the more quote unquote leaders, you could say, I think it would be something like a Zoom, a Roku, a DocuSign. I think those are relatively larger cap, kind of sold off tech names, and I think if they go green, you'll see the rest of them go green. Something like Peloton as well. I'm not sure that will actually bounce, but something like that will kind of, they're all kind of correlated together in the same basket. So if we see kind of like those names turn green, I think the money will flow to pretty much everything there. So on my end, that's it on the update. So I'm gonna pass it over to Ramji for his thoughts.
So DJ covered the indices very well. Yeah, similar thoughts on my end. I mentioned it last week, but SPY I think is much better risk reward. As I mentioned, I posted a screenshot of a chart in the group, but on SPY, looks like we're entering a new level. This is the weekly chart. So it looks like we sort of broke out last week and this past week, and we're kind of entering a new level. So it looks good. Continuing bullish, as I mentioned. QQQ is a little bit more risky, but just because we're still sort of in this range. So I think it could be a possibility that we sort of pull back to somewhere around the lower half of this range, possibly a midpoint and bounce. But I do think we would see a higher low. So continuing bullish, but just de-risked on my end because we are in shorter term QQQ. So I think it's more ideal and to go a little bit more risk off, given that we got significant profits on these QQQ March calls in just a short span of time, as we got extremely large rally one of the largest weekly rallies throughout the year on the indices going forward. But overall, I think it looks good. We always typically get a New Year's rally market wide, so I think it looks good. I'll go on some of my 2022 predictions going forward, maybe in later on in the live session. But yeah, overall, both indices look good. SPY is looking a lot better than QQQ. And it looks good there. Moving on to Tesla, we do have the next week options, next week calls, as well as the leaps as well. I mentioned I took the shorter term calls as well, added this past Friday on the quite the sell off this past Friday. Good risk reward in my opinion, because we did see delivery numbers. So delivery numbers did come out well above analyst estimates. Not a surprise. As I mentioned, this quarter was anyone in the know would say this quarter was projecting to be a very successful quarter. Tesla did blow out with this extremely large number. Total deliveries for 2021, 936,172. So really, really great numbers. 2022, going to 2022, it is a significant year. I think it'll be a very, very, very bullish year for Tesla. You have to realize as well that majority of these numbers are coming out from Fremont and China ramping up. So Giga Shanghai has proved to be very successful. They've been ramping Model 3, Model Y deliveries, and it's been very successful. In 2022, we do have Giga Texas and Giga Berlin, both will be ramping. First, Giga Texas turning into headquarters over there. So I think the year for 2022, you'll see, a continued pattern. As I mentioned, in quite a few past live sessions, the pattern is the same here. Analysts, they don't really understand the incremental growth that Tesla, the incremental growth rate that Tesla pursues with their production, and they're in an extremely fast production rate. Their gigafactories are turning into terafactories and only getting bigger. They're expanding capacity, focusing on Model 3, Model Y as that's the bulk of their orders. And every vehicle produced is being sold immediately. So really, it's just especially with Berlin, improving logistics, and that's Tesla's focus right now. Elon shifted the focused the just past quarter with the employee wide email, focusing less on the actual numbers and more on improving logistics. So this is what we're seeing, and as a result, the delivery numbers are reflected even more substantially as before, as a result, because it's sort of increasing the productivity of the entire logistics aspect, and therefore increasing deliveries as well. So 2022 will be a great year. Analyst again, mentioning the ongoing pattern. You're seeing analysts putting estimates that are quite low for anyone kind of really following Tesla. You can see that these estimates are extremely low for what Tesla is able to produce, and I think it will only increase. And in 2022, again, you'll see the same pattern of analyst giving low estimates, and Tesla well exceeding the estimates, and they'll have to continually increase their projections, and going forward, and their price targets as well. So this week I think we'll see either this week or next week. Sometimes it's delayed, but again, like last quarter, I did the same play last quarter, but you'll see analyst upgrades and price target increases based on these numbers. As they're putting forward year of 2022 numbers, they'll have to input these year over year increases. This one almost 100%, and price targets will be increased. So yeah, looks really good, and I think Tesla can make a move earlier on in this week as a result, and then will sort of piggyback on top of analyst price target upgrades going forward. They do typically some of the big firms do typically provide updates for the new year, and with Tesla deliveries coming out, I think you'll see quite a few analyst upgrades over the next 2 weeks. So Tesla looking good, chart is looking good as well moving forward, and we do have the leaps as well, so looks really good overall. And the same goes for my thoughts on GM and a lot of the legacy autos. It's essentially the opposite effect. We have analysts overestimating deliveries, overestimating success of these new flagship models shifting, these companies shifting into EV. And I think overall, when we see earnings, it will be the opposite effect. So we saw this past two GM earnings. Same with Ford. I think you'll see that going forward. We do have GM put leaps, and I have a short on GM as well. And going forward, so that's performing very well. Watching it at this point, because if we do increase into earnings, which is at the end of the year, end of the month, for GM. I'll just add on to the puts and short, and if we continue to move down, I'll just leave it as is. So it's sort of a win-win there. Zoom, same thing. This one, bring it up as well, because we had a shorter term play, proved to be very good. Same with Lemonade as a tax loss play. Given that 29th was sort of the last day for tax loss selling, opened a shorter term play, which proved to be very good. Zoom did a 6% day on the 30th. Very good there. Zoom, again, in my opinion, reiterate, I think that it's the best sort of tax loss play for into the beginning half of the year. I think we'll see quite a bit of bullish momentum on Zoom. Based on valuation, it's really just at a great level right here, and I think it's just continuing to kind of consolidate and hold support. So looks good on for Zoom, and continuing to hold shares and a small position in leaps into the beginning of the year, so into 2022, and I think it will perform extremely well. Lemonade, just bring it up for this past week because we did get again that same move on the 30th after we opened shorter term calls. We did get a significant move, about 13%, as DJ mentioned, on Lemonade this past week, which increased our calls significantly. So that was a great play there. Lemonade as well. I think good play for 2022 in shares. In my opinion, I think it's a good at these levels. It's just sort of a no-brainer. In my opinion, I think Zoom still, in my opinion, the best play overall, just based on valuations and where it is as an equity position. The valuations just sort of speak for themselves. It's really just priced as almost as a value stock at this point. Honestly, if you look at the earnings, it's just it's a cash cow. It's growing significantly, and I mean, if you're putting the same multiples as based on its growth rate, market wide, this is just at sort of like a Google valuation at this point. So it's really good Zoom. And as you've seen, I've been just accumulating shares and flipping on some highs and then buying back, but overall accumulating shares, and I think it's really good at these levels. Moving into the crypto space, Bitcoin has been sort of lagging, just sort of kind of flattish, getting some downwards volatility at some points. But overall, I think still okay at these levels. Just sort of a waiting game. It's just becoming kind of gaining less volatility upwards and downwards. So um, continuing to watch. I think overall, 2022, Bitcoin should perform fairly well overall, and in the crypto space as well. Some of my thoughts for 2022 is I think 2022 will be a significant year. Personally, I think this year will be the year that we sort of see a sort of possible correction or possible crash. I think it'll be stimulated overall by mainly economic factors. So um, mainly by the Fed. When the Fed begins to sort of back out on their balance sheet and reduce their balance sheet overall, which is sort of imminent at this point. Spending levels for the past 2 years have been just off the charts, through the roof. So overall, I think it will be maybe somewhere in the in my opinion, maybe second half Q3 possibly, but it's hard to predict an exact timeline for these things. But basically, I'll be watching bonds. So bonds will sort of provide a little bit of a precursor to when the Fed is actually reducing their balance sheet. At this point, as I mentioned, with tapering, the Fed it still isn't actually reducing their balance sheet. So the taper, it's not really affecting the market, and we're seeing large caps continue to increase. So what I think for 2022, I think it's possible to see at least in the earlier half, possibly. I think it's possible that we could see maybe around Q2 some of the large caps moving sort of flat, whereas the smaller caps and some of the growth names that sold off sort of increase significantly, and in turn you'll see the indices continue to increase as a result, where it's the opposite of what sort of happened in 2021 where we saw large caps leading the market and holding up the entire market, and really rallying, whereas smaller caps and some of the growth kind of decrease significantly. So I think we'll see a sort of similar to sort of the latter half of 2020, where we'll see large caps sort of flattish, and some of the smaller caps and growth sort of increase a little bit more significantly to hold up and boost up some of the indices. And then overall, I think it'll present for a lot of opportunities, because if we do see some sort of economic downturn, recession, and Fed reducing their balance sheet, it will be extremely significant and will provide for a lot of opportunities. So very excited for the new year. And I think that this year is definitely, in my opinion, the year that we see a sort of correction or crash in the market, mainly stimulated by the Fed, stimulated by economic factors overall. But yeah, just kind of keeping an eye on bonds overall. DJ, if you want to mention your thoughts on the year as we're kind of entering it.
Sure. So I kind of mentioned it briefly, but for 2022, I agree. Like, this is the year that we're gonna have that market-wide correction. Still my belief that I think Q1 is going to be pretty bullish and should continue the melt up, in my opinion, into Q1. Post Q1, I think between Q1 and Q2 transition, we could see some weakness in the markets and some signs of some breakdowns here and there. But I think for the most part, price action won't break down too hard in Q2. But I think the latter half of 2022, if the timelines don't change on the Fed and etc., I do think the latter half of 2022 is going to be quite bearish, and it's going to set up for pretty much a market-wide correction. I don't really know the speed of the correction and how long it will last. It really depends how fast the algos and the investors are actually selling. All right, it could kind of last a very long time if we're just in a slow downtrend where we're just kind of slowly bleeding lower lows and lower highs. And it could also be just a very quick, swift one, maybe just a month or two, or a couple months, something similar to March 2020 of the COVID dump, in which the market just pretty much uh, overcorrects on the assumption of um, the next future years. And that scenario would be a lot easier to play and a lot easier to kind of buy dips for really good long-term positions. But I suspect the first one is going to happen, whereas um, we might initially see a relatively quick kind of drop in the latter half 2022, but I think it will just kind of turn to a very prolonged, maybe 6 to 10 month kind of slow drawdown, bleed down, etc. like that. So um, my end, I'm positioned for a Q1 rally, and I would be looking to pretty much go into a very big cash position and then start um, seeing if there's opportunity to play the downside. Thing is, there's in a kind of slow drawdown. I don't think puts would even perform too well. It really depends in the scenario and the speed of the drawdown. But uh, overall, I'm not too bullish on the latter half of 2022.
Yeah, I think a TLT play on bonds is good, or in my opinion, longer term SPY puts, kind of going far out and just holding. But also you have to look at in a correction, at this point, S&P and Nasdaq have a long way to go down. A lot of room to decrease. If you're looking at almost every economic indicator at this point, we're looking extremely extremely high currently. So I think overall, bonds will tell the story. It'll be a bit of a precursor. So I'll continue to watch that throughout the year, and from that we'll get an indication of when we're moving down. If we get any rate increases, obviously that will do the same trick. But when we're entering sort of a recession, at that point, there's not much rates can do at that point, right? Because really you're just trying to stimulate spending at that point. So yeah, I mean rates are at an all-time low at this point. So it sort of lines up completely. And then even if you look at some economic indicators like percentage of IPOs, all of that, we're looking at in my opinion this year to be the year that we sort of see a correction or crash, which will provide for ample opportunities. So it's pretty exciting overall. But yeah, I think the play to go with, as a base play overall, is longer term SPY puts, or QQQ puts. So playing on the Nasdaq, I think QQQ would be better because the tech sector is in sort of a more frothy position, and if we get any rate increases, or even the anticipation of a rate increase, which as we saw with growth this year, the anticipation of inflation is enough to completely wreck high multiple growth companies that are sort of trading more on the anticipation of future earnings, rather than more so current growth numbers. So You saw the Zooms and etc. Also, coincidentally, a lot of those names coincide with stay-at-home stocks, so that had a bit of an effect on it as well. But overall, I think just it's proven that with what we saw in growth, that just the anticipation of rate increases just draws down these high multiple growth companies. And I think we'll see sort of the same thing, in 2022, as a result of, expecting rate increases as Fed meetings, come closer. So the first one is in March, I believe, where they can do a possible rate increase, and then following that, I think it's another 3 months out. So it's every quarter. So yeah, going near to as we get sort of near to that Fed meeting, I think we'll make some downside plays, in anticipation of, I think, the market sort of pricing in possible rate increases in some of these larger cap, more a little bit more higher multiple names. So yeah, that's my thoughts on that. And Austin mentioned in the questions, if we could go over overall performance returns. So yeah, on my end, I checked it this last Saturday, which is yesterday. So overall, I'm looking throughout all my accounts, short term and long term, just under about 95%. Which is good. Overall, beats about the entire market. Mainly stimulated by Google, Tesla, which are extremely large earnings. Large holdings on my end, and then as well as Matterport, Roblox, and then throughout the year, various SPY and QQQ leap positions, and then more near term, more recently, GGPI, and then some of the names that sort of drew me down a bit, on my end at least. I had a larger position in Square and PayPal, so that those both names kind of took a bit of a hit throughout the year. So I had those in my longer term accounts, more so Square than PayPal. And then also I had a bit of Lemonade. I had a larger position. I sold majority at the top. As you guys saw, I entered around end of 2020, and then within a few months, we increased significantly. So sold majority, but I still had a bit, so that took a little bit of a drawdown. But then EV plays as well, throughout the year, made significant gains on that. A little bit on as of recently, a little bit on Baba short, Rivian short. So some of the short on the short end, and then as well as recently GGPI and Tesla as well, which is my top holding in the large my long account. So yeah, pretty good return overall. Nothing like 2020 percentage wise. Dollar wise, really good, because my portfolio is a lot larger, but 2020, I don't think the percentage wise, the returns will come close to that, because we're 2020, it's a lot better opportunity, because you have a crash where when you have that crash, it presents for significant opportunity for percentage wise gains. But yeah, I think 2022 though, I think the opportunity in 2022 could potentially be much better than the year we just had this past year, 2021. Because if we do see any sort of correction or downside, it will present for significant opportunity both to the downside and to the upside, and proceeding any sort of correction to the upside. So yeah, very excited for the year ahead. Also with portfolio returns as well. It's a little difficult to provide a general idea, because my portfolio is a lot larger than I mentioned it before, but my portfolio is a lot larger than majority of people. So the percentage returns sometimes, you can't really compare too much because it's a little bit of a different risk off and risk on, for different portfolios. So I mean, you can kind of look dollar wise, but yeah, I mean, I guess you could get a little bit of a general idea though. So yeah, I mean, it makes sense. Yeah, but DJ, if you want to cover it on your end as well.
Yeah, sure. So my brokers don't have like a real performance review, so I don't really know um, which which stocks or holdings or options the majority of the money came from and the majority of the money lost. It just had to be based on my own memory, but I did check about like an hour and a half ago, right before the live session. I do have multiple accounts. Um, I do have multiple accounts, but my accounts differ quite a bit in actual value. So I'm really just going to count my main trading account for the percentage gains because it is a lot larger compared to the other portfolios. They're a lot smaller. So my trading account return for 2021 based on December 31st close seems to be about 109%. But I looked at the like basic analytics and pretty much um, around half of that came uh, in the first 2 months of 2021. So I believe the first 2 months of 2021 was um, I think that was the peak of the meme stocks rally, the peak of the SPAC rally. I think that's when Lucid was CCIV and it kind of made like a five x move. And during that peak 2 months, that was about I think about 50 or 60% of my gains in just that 2 months, and in the span of the latter 10 months, overall, it kind of you know contributed the other 40-50% of the gains. And I looked at it and actually the growth is relatively stagnant, I think, between the months of July to September was relatively stagnant. It's around just a few percent up or so. October and November was up a good amount, and then December down a good amount because my portfolio is positioned in a lot of the tax law stuff, and they basically continue to take a beat so far in December. But overall, year-wide, pretty good. Pretty good, like 100% plus returns. Like Ramsey said, nowhere close to 2020. 2020 was significantly higher. I may have hit even 300 or 400% in 2020. I'm not too sure on that end, but um, uh, two factors pretty much. I mean, the larger your account is, the lower the percentage is going to be naturally, especially if you're risk managing um, along the way. And the other thing is, I really don't think we'll ever see something like 2020 for a very, very long time. It's got to be at least like a decade or more, I think. It was just like it's one of those scenarios where you just have mass panic, and we're talking about like a 35% drop in indices in a span of like 3 weeks, while the Fed is literally, you know, telling everybody they're going to be injecting like $5 trillion in the economy. So you had stocks drop like 70% in a span of weeks and then go up like 20, 30x in the span of the next 6 to 10 months. Um, that that pretty much isn't really going to happen in a very, very long time. Like multiple reasons. Main reason is a lot of their valuations are already sky high at the moment. So just to get that same 10x multiple from current valuations is just near impossible on the majority of the stocks, as opposed to before. It would require just a massive correction first, which, like forecasted, should happen in latter 2022. But how big it is and how market wide it is a big story. And the difference is, post that kind of market correction, we're not going to see the immense recovery that we saw in 2020 because we're not getting that stimulus and uh, the injection from the Fed anymore. It's just going to be a kind of a slower recovery back into a long-term bull market, but it's not going to be anything close to like we saw in 2020 at all. So those percentage gains definitely not sustainable, and both 2020, 2021 indices performed outperformed like what they regularly perform, like by multiples of multiples. Um, I think heading into the next year, the indices are, in my opinion, likely to close lower than what they're currently sitting at year to date. Of course, I do think Q1 will go higher, but I think as the year ends off, I'm expecting both both indices to close quite a bit lower, if not a lot lower, compared to uh, what it is this year. So um, the goal is to make profits short term or long. Definitely 2022. I do think there's still going to be ample opportunity. I do think it's going to be a little bit harder um, than it is this year and the year before. A bull market is just always much easier to play than a bear market. There's no doubt about that, but it's definitely playable and it can kind of adapt to it. The only problem that I see is just is the speed of the pullback and drawdown, in which there wouldn't be too much opportunity, except you could kind of just sit on like really long-term puts or something like that, and you just kind of sit on like in the money long-term puts, or consider even shorting in the money calls or something like that, because just buying shorter term kind of puts in a slow drawdown might not even kind of work out as well either. So that part, not too sure, but kind of like we'll take a look at like the premiums and then the market conditions once we get there. But I think 2022 is going to be a much more challenging year in terms of trades overall. I still expect to perform quite well. I don't usually have any percentage projections for my portfolio year to year. I kind of just go as is. But I would be expecting still, a decent 20, 25 to 50%, some sort of year, give or take. It really is. I think the big opportunity is just Q1, similar to this year 2021, where the portfolio says like more than half of my gains came from the first 2 months. I'm expecting something similar. That if we are going to get this continued melt-up rally, the setups are kind of perfect to squeeze a lot of the heavily shorted stocks, and I think there is that possible 2 month rally into Q1, and from there, I think the rest will play out similar to 2021, whereas there's not as much opportunity and not as much percentage gains to be had in the latter quarters of the year, and I think the difference will be that in 2022 the latter half of the quarters will actually be overall bearish on the indices. So yeah, but overall that's my thoughts, and 2022 still a good year and looking forward to it. So overall, everything is good and setting up for a new year and a new challenge.
Yeah, I think that maybe the recovery will be a little bit more prolonged, but I think the downwards move might be prolonged, but not as much. But you know, percentage wise, there's a lot of room to drop. So I think that with sort of what I do with SPY leaps, the same thing to the downside. I think will be significantly profitable, as well as bonds, because bonds don't move much. So any sort of derivative product on bonds will print fairly significantly and be extremely profitable. But I think it'll present for a significant opportunity. And then we also have the individual names. I'm always catching plays here and there, kind of macro plays on individual plays like new IPOs, etc. And then we do have a lot of new IPOs, I think, that are rumored to come out in 2022, which I think will be pretty significant for the new year. Some that I'm already invested in, like Stripe. I have an insider who states that Stripe is rumored to IPO in 2022, and that will be extremely significant. And if we do see any sort of correction, it'll provide for extreme discounts on a company private going public like Stripe, which will be a very significant sort of lifetime opportunity in my opinion. And I think overall it looks good for 2022, and there'll be significant opportunities. Given that we can sort of see what I expect overall throughout the year to be a sort of rally up, and then sort of a correction, and then maybe the start of a recovery. But it all kind of depends on Fed spending and the balance sheet, which I'll be watching. Those economic indicators throughout, and just again watching bonds, which will sort of be the precursor to any sort of indication of the Fed reducing their balance sheet, which is imminent, and they should be doing shortly, sometime throughout this year. And then I think coupled with possible rate increases if we see it, or even the notion of investors preparing for a possible rate increase that will cause significant movement in the market. So 2022 should be a great year. Very excited for the year ahead. And I think there'll be a lot of opportunities. So we'll always, as always, we'll keep you guys updated. But very exciting to go into the new year, and very excited for the year. And I think it'll be great for all of us. So that's about it on our end. So I hope everyone has an amazing, remainder of the weekend, and I hope everyone had a great New Year celebration. And we'll be back on Monday tomorrow to get good this money, guys. So hope everyone has an amazing remainder of the night, and take care.
Yeah. Cheers, everyone. See you tomorrow.